Welcome to the latest Motley Fool scoreboard. I'm on in Chocolate Blue, and we've got longtime fools Jason Hall and Matt Frankel giving a 1 to 10 rating to a top 200 primary hidden gems database stock. It's Synchrony Financial, ticker symbol SYF. Rate the strength of Synchrony's business first, including factors like industry and competition. 10 is invincible, 1 is hopeless. Both of you have 6s, Matt.
Yeah, so when you go into a store and buy some clothes and they say apply for our credit card today and you'll save 25% on your purchase, there's a good chance Synchrony's behind that. They're the clear leader in store credit card products. The business has fantastic margins, which I'll get to in a second. Great relationships with top retailers. They have a low-cost deposit base because they're a bank. But it is a very competitive space, and store credit cards can be really cyclical in tough times.
Yeah, Matt, everything you said, plus remember Klarna? We just talked about Klarna on Scoreboard here recently. Guess what? These buy now, pay later companies are becoming aggressive competitors in this space. So you're talking about a business that's getting super pressured, and it's a pie that's not really growing a lot. Maybe we see seasonally and cyclically, maybe more people are using that kind of credit, but that's usually a yellow flag, not an opportunity, because people need to use credit more. So yeah, I like the business, but I don't love it.
For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Jason's at a 7. Matt, you're at an 8.
Yeah, Brian Doubles, he's been a great CEO since 2021. The stock has handily outperformed the S&P under his tenure. Not all the financials can say that, trust me. And he's done a great job of keeping margins high, even in kind of a tough interest rate environment, managing asset quality, which is kind of tough with a store credit card business. So I give him an 8.
So, Matt, how much is this stock up since he took over CEO?
93%.
So does he need to change his last name to Triples? Bad jokes. I apologize, but I'm not sorry. Seriously, though, he replaced the original CEO at Synchrony from the GE spinoff. So we're talking about the second CEO in this company's history as a standalone company. He's also was one of the executives that was there at GE as they were spinning this out. You love to see good succession planning going well. The 7 that I gave him as a score, I want to give him credit for the strong results of the business and the stock price since it was named as CEO. But he's getting dinged a little bit here because he was a key executive, as I said, for what has really been a market performer since it went public. And for most of that time, it was actually an underperformer.
For financials, a 10 is a fortress, a 1 is yikes. Both of you have 7s, Matt.
Yeah, Synchrony has a strong balance sheet, but Jason brought up Klarna a few minutes ago. We talked about how Klarna had a 0.4% net charge-off rate. Synchrony's is 5.2%, and that's in a good economy. So it's high compared with other credit card issuers. It's the nature of the store credit card business. Almost all of their funding, 85% of it, comes from consumer deposits, which are low cost, good capital ratios, and a 15.6% net interest margin is how they can get away with a 5.2% net charge-off ratio. That would make any other credit card operator jealous.
Yeah, that's the nature of the business, and you have to get those really high levels of returns when times are good, because eventually times are not going to be good. But for those times, they have a balance sheet that's in good shape, and it's always been strong. They've structured their debt risk, I think, pretty well. And honestly, this is one of the better parts of the post-broken apart GE business that Jack Welch built. It just didn't really belong as part of that industrial conglomerate.
All right, Jason, let's talk valuation. How well will Synchrony stock do over the next 5 years? How safe is it? 10's a sure thing, 1's a lottery ticket.
It's funny. Matt had better scores on Klarna than I did. I have higher scores here, which is kind of odd if you think about the risks of these two businesses. My safety score is a 6. I do think it's a little safer than what Matt's going to say. Directionally, I think we agree, though. It's going to go as the economy goes over the next 5 years. Stock's going to be good, do good if it's good. It's going to do great if the economy's great. But if it's not great, the stock's probably going to do potentially bad, but that balance sheet's going to prop up investors a little bit. I think the range is 10 to 15% probably.
Yeah, I agreed with the range, but pretty binary, actually. I give it a safety score of 4. I said Synchrony, it trades for less than 9 times earnings in a regulatory-friendly environment for banks. If the economy and interest rates cooperate, this will be a 15% plus gainer over the next 5 years.
Yeah, I'm glad you mentioned that multiple there because valuation is really attractive to me, and that's one of the things that I do think helps protect investors a little bit.
I totally agree, but store credit card default rates tend to spike high during tough times. That 5.2 default rate could be in the double digits easily. And I mean, store credit cards of 30-something% interest. They're the ones people let go first in tough times. So keep that in mind.
Yeah, once you get to a default rate of 10%, remember that default, a lot of that's 100% write-off. That even if you have a 15% net interest margin, that hurts. Thank you to both Jason and to Matt. They've given Synchrony an all right overall score of 6.6 out of 10. For Toppets, Matt prefers American Express, and Jason prefers Klarna, even though, if you go back to that recent scoreboard, he clearly doesn't love the space in general. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Eli Lilly. Till then, Fool on.
You know what they call Burger King in Sweden?
Royale with cheese.
Burger King.
Oh, I thought you were making a Pulp Fiction joke.
Yeah.
No, he
that's
went
pretty good.
Muppets.